Good morning, everyone. Good morning. Hope you guys are doing well. Today is April the 9th. As you can see, overall markets, a little bit of a pullback yesterday, coming into today unchanged. No news in the overnight session. So gonna open up pretty flat here in the markets. We do have some red folder news right in the morning, so we'll kind of talk about that. We do have core, I think it's the core PCE price index at 8:30. And then we do also, of course, have core CPI tomorrow, which is going to be the most important. Before we head on to the economic calendar, let me actually pull this up. What's up, everyone? Good morning. Good morning, P1. Good morning, B Roots. Good morning, Victor. Good morning, Andy, Maria. Another Maria. What's up, Marcus, Juan, Robert, Lamed, Martin. Good morning, Knight, Venaz, Deuce. Good morning, Gerald, Cinna, Cosmic, Nazi, KO, Will. Good morning, Sam, John. Another Cosmic. Good morning, Miss Reggie. What's up, John, Ashley, Nama, Julius. Yeah, what's up, everyone? Hope you guys are doing well. Let me pull up the economic calendar, which we have right in front of us. As you can see, really for the economic calendar, as I mentioned, pretty slow news day in the overnight session. Not too much is going on. You can see markets, as I mentioned, unchanged. As for today, what is the red folder news that we do have? Let me actually zoom this back out. What we do have this morning is going to be that core PCE price index month over month. That is going to be at 8:30 a.m. Eastern Standard Time. Similar thing here with the final GDP numbers along with the unemployment claims. So this is all going to come out at 8:30. We'll talk about this here in a second. We'll go over some charts, and then once these numbers do get released, we will just check out the numbers to see how it impacts the market. The main thing, of course, is going to be the Friday core CPI month over month, along with the year over year. Expecting this to have a more bigger impact, of course, on the overall markets. And we do have the prelim consumer sentiment as well, which is going to be at 10 a.m. Eastern Standard Time tomorrow. So the main thing is, of course, tomorrow's CPI. We do have the core PCE, which, as I mentioned, we'll see how that impacts the market. With that being said, let's head straight into the charts to see exactly what we're looking for today. Really, the main thing moving forward here now is to see if we're going to have continuation back towards the upside, or if there is a potential for that gap fill back towards the downside, the gap that we created here yesterday. So let's first start off on the SPY along with the ES. So let's go into the daily chart. As you can see here, starting off on the daily time frame, overall markets, as I mentioned, gapping up here. And as you can see yesterday, price pushed towards the downside. A little bit of buyers stepped in and kind of a neutral close. So we opened up at a very similar spot to where the market closed at. But as you can see, the daily time frame kind of wicked, and we end up closing back right into that really 676 area, along with that 680, kind of this higher time frame level of support turn resistance. And I can see we have a pretty big gap here in the market. So moving forward, the question is if we can sustain the gap, hold the gap, and potentially continue back towards the upside above at 680 and above, or if we're going to break underneath the gap, hold underneath, and potentially fill it all the way back down in towards that 660. So as I mentioned, the key levels that we have coming into today moving forward is just going to be that 680. If we can break underneath that previous day lows, buyers step in, reclaim back above that previous day highs, and get above that 676 and hold, we can see a bigger push back up in towards that 680, along with that all-time highs here in the overall markets. If we break underneath that previous day lows, hold underneath that previous day lows, and price just kind of stays heavy, then we could be looking for that trade back down in towards, of course, that full gap fill that we have created. We're going to go into the lower time frames here in a second. But as you can see, overall now for the markets, the key line in the sand for me was actually this 660. As you can see here, this was kind of the lower high area for the overall markets, at least on the daily time frame. And once we broke back above this level, that was kind of that lower high that I mentioned that we did have. And we had a huge gap up here. Of course, we did have a gap up on news, but now for the overall markets here on SPY, as you can see, we're gapping up. We're right in towards this 680, right? If we are looking for long positions, it's going to be a little bit difficult because if you're looking for longs all the way up in towards this 680, right? If you're long from your 640, right, either all the way down in towards that 630, right, you're in a good spot, right? Yesterday, there's a little bit more kind of profit taking here after this big gap up. Now, if you're looking to go long on the SPY, there's really only two scenarios. Number one scenario, as I mentioned, it's going to be either the pullback longs once we fill that gap, right, to kind of make a lower high here a higher low here on the daily chart. Potential kind of right shoulder holding off that 660 for that continued pushback towards the upside. Or if price does want to stay strong, right, above our previous day highs hold, we can see a pushback up and towards our all-time highs here as well. I personally like to see that 660 gap fill. That would be nice for potential higher low here on the SPY chart. Wouldn't be as opposed to the break above our previous day highs, but as I mentioned, this one already had such a big gap up. If we're looking at this on a daily time frame perspective, preferably that pullback down in towards that 660 would be nice for continuation towards the upside. Okay, now let's go on to the lower time frames here. Let's go on to the hourly chart and talk about the levels that we have coming into market open. So for the SPY, key levels that we have marked out is just going to be that previous day highs along with that previous day lows. So 672 along with our 676 coming into market open. If you do want to see some upside in the overall markets today, really it's going to be the push down in towards our previous day lows, buyers step in, and we can see this mean reversion back towards the upside off that previous day lows 672. Another possible scenario here now is of course above our previous day highs. Hold above our previous day highs, potential room up in towards that 680 and above. So really these are the only two scenarios that we have on the SPY coming into market open. I personally like to see the hold of that previous day lows. As long as you can maintain above that, I am leaning more towards the upside here on the overall markets. If you do want to see some downside here on SPY, the only potential scenario that I do have is going to be this break underneath your previous day lows hold for a potential move down in towards, of course, that full gap fill that we do have. So for the SPY, price would have to get underneath our 672, hold underneath that 672, and then we could be leaning a little bit more towards the downside for that gap fill, of course, all the way back down in towards that 660. As I mentioned, I'm not expecting this gap to fill within 1 or 2 days because it's such a big gap in the overall markets. If it did want to fill, maybe it would take a couple more trading sessions, maybe next week, or we need some sort of news catalyst to push this all the way back down in towards that 660. At this current moment, I'm not really short biased. I'm more neutral, higher time frames flipped here as well. I do want to see if the market does want to now defend that previous day lows for that pushback towards the upside. What I'm afraid of here on the short side is the break underneath, right? And then it just kind of breaks underneath, is a fake out, buyers step in, and we end up pushing back towards the high. So I'd be a little bit more cautious on this kind of aggressive short towards the downside, looking for continuation lower right off the bat. Just be a little bit more cautious. Buyers could very much well step in, look below, fail, and then we end up having that reclaim and push back up and towards that 676. So don't be overly aggressive towards the downside, in my opinion, until, right, you have a lot of relative weakness, break underneath on the higher time frames, and we show some more weakness specifically on the QQQ as well before we go look for SPY continuation in that gap fill. As for the ES, very similar thesis here. Went over the higher time frames on the SPY. Key levels for the ES, basically the exact same levels previous day highs, along with our previous day lows here. If we're looking at this on the hourly time frame, similar thing, right? If we do want to see some upside, hold above our previous day lows for continuation. Another possible scenario above our previous day highs here as well for that push towards the upside. Shorts are in play here, but I would just be cautious. As I mentioned, it would have to break underneath, hold underneath that previous day lows if we do want to see any sort of push back towards the downside. As you can see, huge gap up in the markets, not expecting to fill, but we could see half the gap here on this SPY if you do want to see a little bit more weakness. Okay, that being said, now let's head on to the QQQ. We'll head on to the NQ here in a second as well. But let's first start off on the weekly time frame. So as you can see here for the QQQ price, now we're kind of talking about it from a weekly perspective. Overall markets, as you can see, look at this week's candle here on the weekly time frame. Fairly lower wick, lower wick here. Big pushback towards the upside, and now you can see buyers are very much stepping in after last week's bullish close here as well. So this week we're seeing some follow through on the QQQ. Now we're just kind of coming back up into the general area, which we originally broke down from. So as you can see here on the weekly time frame, in order for price to push back towards our all-time highs, we're going to have to get back above that 610. And of course, that weekly would have to close strong. And then next week's candle would have to start bullish and push back up and towards that 640. If we look at this daily time frame, what we have here on the QQQ, very similar thing, right? Lower highs were being built. Our key line in the sand for the QQQ was really that 590 along with that 595. We were maintaining a little bit more of a bearish stance. If we can maintain underneath that 590, if we flip back above, then of course the market can flip here. And of course we end up getting that nice move, of course, in the overnight session with the peace deal that we did have. So end up gapping above one of our key levels here on the QQQ, and very similar thesis along with the Qs. So currently we're flipping back bullish here on the daily time frame. Now, as you can see, the higher time frame starting to flip more bullish here, especially on the daily chart. If we look at the hourly chart, right, kind of higher lows are being built as well. So if we look at the QQQ and we do want to look for any sort of long positions, at least on the daily time frame, right, we much rather look for any sort of major pullback. So for the QQQ, gapping up here, we have a gap fill towards the downside. This is technically our higher low here as well. So Qs, very similar thesis to SPY. We have really two scenarios coming to market open and moving forward actually is going to be that dip all the way back down and towards that 590 for that gap fill, and then higher lows be built off that 590 for that continuation back towards the upside. Or now if price does want to stay strong, we look below that previous day lows, buyers step in, then we could be looking for longs above our previous day highs, targeting that 615 and potentially above, which is of course going to be that all-time high. So really two scenarios here on the market. I'd prefer that gap fill, at least on the higher time frames. We would have this kind of higher time frames, inverse head and shoulders here as well above that 590. But that's what we have for the QQQ, at least on the daily time frame. If we now go on to the hourly chart, the key levels that we do have coming into today is going to be that 602 along with that 610 previous day high. So coming to today, previous day lows marked out. We also have that previous day highs. Really a couple scenarios, really only one scenario for upside today. It's going to be that bounce off our previous day lows, hold off that 602, reversal trade back towards the upside. Another possible scenario, of course, is going to be longs above our previous day highs. This would have to show a lot of bullish price action right off the bat. We are a little bit further away from our previous day high, so most likely we're going to use that previous day lows coming into market open. Another possible scenario actually is that opening range candle. If we can have a fairly bullish opening range, we could be looking for that trade up in towards that previous day highs here as well. If we're looking at some downside, similar thing here on the SPY chart. What I'd like to see is the break underneath that 602, hold underneath that 602 for any sort of continuation back towards the downside. I would be a little bit cautious, as I mentioned. I'm a little bit careful of the potential break underneath, the fail, the reclaim, and we end up getting that pushback towards the upside. So I'll be a little bit more cautious on downside right off the bat. It is possible that we could be looking for that full gap. There's plenty of room. So there's plenty of room towards the downside. We have this huge gap in the market. So you don't really have to be the first one right off the bat, if you're looking for some downside here on the QQQ, as I mentioned, we have about a 15-point gap up here on the Qs along with the SPY as well, fairly big gap up. So you don't have to be the first one to look short towards the downside. You could be waiting for a clear break underneath, and then you could be waiting for that retest off for 602 or for some other trading opportunity down in towards the middle of the gap, along with that full gap fill here, which I'm not expecting to fill within one day. So for the downside, be a little bit more cautious. I would like to see, as I mentioned, those buyers step in, at least coming into market open, along with the SPY here as well. If we're looking at the QQQ chart the NQ chart coming into today, key levels that we do have marked our previous day lows along with our previous day highs. What I like to see, as I mentioned, the hold above that previous day lows for that continuation back towards the upside. Kind of forming a small, someone's mentioning flag pattern here as well. Exactly right. Kind of basing, nice push towards the upside, basing above our key levels as long as you can maintain above that previous day lows. Right, we can see that push back up and towards our previous day highs, 25,200. So keep that in mind for the NQ coming to market open. If we do break underneath that previous day lows, then I'm going to be a little bit more neutral, potential lean more towards the downside. If we break underneath, hold underneath that previous day lows, 24,950. So that's what we have for the major indices coming into market open. Previous day lows, of course, is going to be that key level. Now I am going to go on to the SMH chart and IWM. If you guys do have any tickers or any charts you'd like me to go over here now, you guys can drop them in the chat. If you guys are enjoying this so far, appreciate if you guys drop a like. Let's see if we can get to 200 likes today. And of course, if you guys haven't joined the free daily watch list, that of course is in the description below here as well. All right, I'm going to grab some water before we head on to the SMH. Okay. Let's first talk about the SMH here on the higher time frame. So SMH buyers stepped in last week, a strong weekly closed buyers, lower wick, indicating buyers were stepping in right off our key level of support. And now you can see this week's bullish weekly candles forming as well. And now we're getting that move back up in towards that all-time highs that we have, which is at 430. So for the SMH, Semiconductor ETF, we have a lot of memory leading back towards the upside. Intel making a brand new yearly high as well. That was one of our main watches yesterday for continuation. So a lot of names pushing towards the upside here on the semi side. If you go back onto the daily chart, what we have here on SMH after this big gap up, as you can see, another strong daily candle close here as well. Fairly neutral close. Relative to its market open, its opening price yesterday, but pretty big lower wick here. We're also maintaining this gap and we're very close to our all-time highs. So for the SMH, what I would like to see is the trade up in towards our all-time highs here now, which is going to be that 420. I'll get the exact number, but it's basically that 425, 427 here on the higher time frame. So trade up in towards that level would be nice. Back up in towards it is that 427.98. So let's go into the lower time frames here, coming into market open. The levels that we do have coming into today here now is of course going to be that previous day lows. Currently, we are opening up right in between its previous day's range. We have our previous day highs, and then we have our all-time highs here on the SMH. So coming to market open, what are we going to keep an eye out on? Is that previous day lows 416. If we do want to see some upside here for a trade up in towards that previous day highs, along with that all-time high, is we like to see a couple things. Number one, the hold above that 416 previous day lows for that push up in towards our previous day close, along with that previous day highs, and that all-time highs is in play. So this is going to be the first scenario. As long as we can maintain above that previous day lows, we are going to be leaning more towards the upside. Another possible scenario here now is mark out that opening range candle, just because we're in between that previous day highs and that previous day lows. Potential trade up in towards that previous day highs and that all-time highs, which is of course going to be that main objective. Right, so these are the scenarios that we have on the SMH. We are still very much leaning towards the upside. This one, of course, is the strongest really major indice. And of course, you can see a lot of the semiconductors, a lot of the memory names are basically back at all-time highs, SNDK back at all-time highs. So there's a lot of these names that are fairly strong, and that's why we like to see the SMH push up in towards that all-time highs key area. Not really interested in shorts whatsoever here until we hit that all-time highs at a minimum, right? Potential trade up in towards that all-time highs, a little bit of rejection. You can see a potential mini fade off that level. But for SMH, not interested unless we hit that all-time highs or if price came all the way back down, but having a hard time believing that this is going to be a good short after, right? This one's holding up, pretty big gap up in the markets. I do expect buyers to step in here off that previous day low. So really for SMH, right? Don't short what's strongest. And of course, the semiconductors along with the memory have just been leading the markets higher. So hands off on that until we hit an all-time highs at a minimum. As for the IWM, nice consolidation here, break towards the upside. Now what we like to see, we're kind of back inside this area of consolidation here on the IWM. The levels that we are going to have marked out today, of course, is going to be that previous day lows. So we like to see this level be defended if we do want to see any sort of continuation higher. Key levels that we do have marked out today is going to be that 258. Previous day lows, potential bounce play here for a pushback up and towards that previous day close. If we do break underneath and hold underneath that 259, then we could see a little bit more downside here and a potential gap fill on the IWM back towards the downside. So very similar game plan. A lot of the indices look fairly similar. So we are going to keep an eye out on the previous day lows coming to market open. With that being said, let's hop onto some tech names that we do have now coming into today. If you guys do have any tickers that you like me to go over, any charts, you guys can now drop them in the chat. Going to go over some tech names first, and then if we do have any time later, I'll head on to those names. Okay, let's first talk about Tesla. So Tesla, as you can see here on the daily chart, continue to show weakness. So earlier in the week, we mentioned we had a lot of relative strength on Tesla. Tesla was really one of the only red days that we had on Tuesday before we had the decision. And then of course yesterday, a little bit of a gap up, and then ultimately this is the one that kind of filled it towards the downside. So we talked about it earlier last week. We talked about it this week as well. Tesla really selling off into that SpaceX IPO. So kind of a bearish news catalyst that we do have, and that's why every single pop is really being shorted on this name. We do have this gap fill towards the downside that we originally filled, still staying heavy here. So we clearly haven't found a bottom on Tesla. And if we're looking at this on the hourly time frame, we have quite a few levels marked out here. I can just get rid of some of these. But really for Tesla, the main level moving forward coming into market open here, at least for today, is going to be that 368 along with that previous day lows 338. Sorry, there's that 346 along with that 338. Tesla, right, overall markets, pretty big drop towards the downside yesterday, filled its gap that we had created, and now we're close to making a brand new weekly low. Really, the only red name on the tech side, as you can see here, rest of the names are green. Tesla is the only one that is red, as I mentioned with that bearish news catalyst. So for Tesla, if the market does want to consolidate or it does want to reject off key levels, right? Tesla is going to be one of the main ones for continuation lower. The key levels that we do have, as I mentioned, is going to be that 346. What we can be looking for today is that pop and fade here off that 346 for that continued push towards the downside. You can see a little bit of a pop here in the pre-market, rejection off that level, and continuation towards the downside. Another common scenario for today is going to be that pop and fade for that push down in towards that weekly lows, 338 here and below. So Tesla's going to be one of my main ones for continuation towards the downside. Another possible scenario here on Tesla, as well as underneath that 338, which is going to be that Tuesday's lows for that continuation towards the downside here as well, right? Tesla showing relative weakness. This one has not found any buyers whatsoever. Really, even yesterday after that big gap up was not able to hold, filled its gap, and now we're back towards the downside. I do expect it to just continue to head lower off that 348. As long as you can maintain market structure and hold underneath key levels, Tesla is going to continue towards the downside. So keep an eye out for that pop and fade coming to market open off that 348 for that continuation towards the downside. If we're looking at this on the daily chart, as I mentioned, not really interested in longs, would have to get above key areas, preferably all the way back above that 380, and even at a minimum back above that 360 here now, right? Lower highs are being built. You can just expect Tesla to continue lower, down in towards that weekly low that we created, 340 on the higher time frames. As for Nvidia, let's go into this one. Nice kind of bounce yesterday. This one wasn't as strong, kind of dropping right off the bat. Now we're back down in towards that 180. So AMD holding up a little bit nicer than Nvidia. This one kind of rejected off that pre-market high and continue back 50% of the gap that we have created on Nvidia. So coming to market open here, this one not as bullish here as well compared to the some of the other semiconductors. But what we're going to have marked out here is going to be that previous day low along with that previous day highs. If we do want to see any sort of upside here on the overall markets, bounce play here off that previous day lows for potential mean reversion back up and towards that pre-market high along with that 182. There is a possibility we could see that gap fill here on Nvidia. So if we do break underneath, hold underneath that 180, potentially you can see room down in towards that 178.50, which is very much a possibility for that continuation back towards the downside. So keep an eye out on our previous day lows coming into today. We also did have some numbers that came out as well, so we'll take a look at that. Okay. So as you can see here for the numbers that we just had that came out, core PCE came in line with expectations, forecasted 0.4%, actual 0.4. Final GDP numbers came in a little bit lower than expected, 0.7% compared to the 0.5. And then unemployment a little bit higher than expected, not by a lot, but 210 was forecasted, and then the actual was 219. As I mentioned, really not expecting anything to impact the market, at least on the economic calendar wise. We do have the ongoing war news, which is a lot more important. And then tomorrow is going to be fairly important, though, tomorrow. So we are going to have a nice reaction with core CPI, the month over month, along with the year over year. So this is what's going to affect the market tomorrow. And that's the next major news event that we do have. Let's hop right back onto the charts. Let's go on to AMD here now. So AMD, I like this one. As I mentioned, we do have this gap fill back towards the upside. Key levels that we have marked out is at 220. We have this gap fill back up and towards that 240, which is the earnings gap down. So now showing a little bit more bullish price action. We like to see this push back up and towards that 240 that we do have. Key levels that we have marked out coming into today is going to be that previous day highs along with that previous day lows. As you can see right here, these are the levels that we have marked out. If we do want to see any sort of upside, bounce play here off that 229, previous day lows, potential continuation back towards the upside. Another possible scenario, kind of this trade up in towards that 233, or now longs above that 233 for that full gap fill. AMD, not as interested in shorts, but if we do have a pretty big drop underneath, hold underneath that 228, potentially AMD is in play for a push down in towards that 225 here. All right, let's go on to Apple. This one, not really doing too much compared to the overall markets. This one went from our range high down in towards our range low. Now we're about to come back down in towards that 256. So for Apple, not really too much on this one, unless it has any sort of higher time frame thesis. Potentially you can see some sort of flag forming, but as I mentioned, don't really like this whatsoever. So for Apple, keep an eye out on that 256 potential bounce play here for continuation higher, or now right short term play underneath that previous day lows, 256. Google, let's talk about this one. Google came up in towards our key areas, a little bit of reaction. So a lot of these ones, nice kind of push towards the upside, just a little bit of profit taking after having this nice kind of V-shaped recovery on the daily time frame. So the next major key level that we do have on Google and the best next buying opportunity is going to be honestly back down in towards that full gap. For Google, right, and a lot of these tickers gapping up in towards key levels of resistance. If we do want to look long, right, potential gap fill, a reversal is in play off our key levels, 305, or if price even came all the way back down in towards that 300 or that 295, right? Kind of this like inverse head and shoulders. We have that head, we have that right neckline, right? That would be key in a possible good area for some long entries based off the daily chart. So that's going to be key here on Google, at least for today. Key levels that we are going to have marked out, of course, is going to be that previous day lows. Mark this out. Keep an eye out on that previous day lows if you do want to see any sort of right continuation higher, reclaim back above, push back towards the upside, break underneath, hold. We can see a little bit of a bigger push down in towards that 310 and below. Microsoft kind of faded right off our last week's highs, right? Very key area that we talked about. Microsoft weak on the higher time frames and showing a little bit more weakness compared to the overall markets. Had to get above this 385 here and pretty sharp rejections, and this one filled its gap towards the downside. So Microsoft still heavy on the daily time frame, has not broken structure whatsoever, so that's a clear telltale sign, right? Structure, in my opinion, is the break back above 410, or at a minimum now it's going to be this 390. Break above this 390, potential flip here, rejection off that 390. We can see a trade all the way back down and towards that 360 on Microsoft. But this one filled its gap. So now this one has been rebalanced. Let's take a look at Meta. Meta had some news yesterday, broke above key levels, one of the strongest tickers in the Meg 7. Broke back above that 580, as I mentioned, had some news yesterday as well, pushing this back towards the upside. Now let's go back onto the lower time frames here. Key levels that I had marked out personally, pre-market high 604. And then as you can see, nice break above here on Meta with news, of course, pushing this back towards the upside. Now the key levels are going to be that previous day highs, 628. What I like to see here on Meta, really coming to market open. This one is closer to the top of the range compared to everything else. Some sort of kind of pullback long right down in towards that previous day close is in play for that continuation back up in towards that previous day highs. Another possible scenario here, break above that previous day highs, hold above the previous day highs, now for continuation towards the upside here as well. So for Meta, this is one of the strongest names. Of course, it had some news yesterday. If you do want to see continuation above our previous day highs is going to be key. So keep an eye out on your 628 along with that full gap fill that we do have. Short side, not really interested in Meta, but a potential kind of previous day high rejection for a push down in towards that previous day close. 616 here on Meta. As for Amazon, this one's holding up nicely, so keep an eye out on Amazon. It is retesting in the after hours and in the pre-market, which is a little bit unfortunate, but for the Qs, this one now gapping up, holding key levels here as well. Amazon looks like it can gravitate up and towards that full gap fill above our previous day highs. Full gap fill here is in play up and towards that 235. So for Amazon, key levels that we have marked out coming to today is going to be that previous day lows, which as you can see, buyers are stepping in. Other levels that we have marked out now is going to be that previous day highs. We can drag this over. 226 is going to be key. So if you can break above that previous day highs, hold above that previous day highs, continuation up and towards that full gap fill here is in play on Amazon. And then for Netflix, this one just kind of consolidating right into a key level of resistance, just kind of consolidating, right around this 100 key psych. It's going to have to get above your 100 key psych at a minimum. That's going to be the reclaim level for that pushback towards the upside, above our 100 or 101 at a minimum for a potential push up and towards the upside. As for a few other tickers, briefly go over this. We're running a little bit late on time here. It is almost 840, but briefly go over a couple tickers. SNDK is at all-time highs. Expect some continuation as long as you can maintain above that 780, which is key. MU lagging behind compared to SNDK, but this one looks solid as well. Above our 400, we can see a trade up in towards that 420 here today here on MU. So let's keep an eye out on that previous day low bounce for that continuation back towards the upside on MU. Intel, one of my favorite names, expecting that all-time highs push on Intel. After breaking above our yearly highs, next major level, of course, is going to be that all-time highs, 60 on the higher time frames, or sorry, it's 64. As for Intel, be a little bit more cautious. The best next area for a dip, or sorry, best next long area is going to be back down in towards our previous yearly highs. 54 on the higher time frames, kind of defending this gap. Not as interested in buying above our previous day highs here, unless it's for kind of a quick day trade or you can get some sort of retest. But for Intel, at least coming into today, be a little bit more cautious, kind of consolidating in between its previous day's range. If you can kind of base here above that 56, you could be looking for that trade up in towards that 59 here, previous day highs and above. So keep an eye out on Intel, or of course, above your previous day highs for a push up in towards that all-time highs. And then for a few other tickers, AVGO moving up nicely here. If you're looking at this on the daily time frame, trying to break above key levels here as well, but pushing up in towards our higher time frame level of resistance. AVGO, right, longs look good actually above our previous day highs. 50, it's really that 352 for that continuation back towards upside here as well. So for the game plan coming to market open here, let me go back onto the lower time frames here now as well. So the game plan coming into today, we're going to keep an eye out on the Qs, previous day lows, maintain above that previous day lows. I am still bullish just based off the higher time frames. Break underneath, then I'm going to be a little bit more neutral and even potentially leaning a little bit more towards the downside if we have strong sellers that step in underneath that previous day lows. But would like to see that previous day lows be defended here on the SPY and the Qs, right? Similar thing, bounce here off that previous day lows for continuation. As for my main watches for the upside today, I'm going to keep an eye out on AMD. I do also like Meta along with Amazon. We can also keep an eye out on a bunch of these other names, right? MU, SNDK, the memory names are still holding up fairly nicely, right? Intel, more inside the middle of the range, but that could set up potentially a little bit later, right? You can see other memory names are holding up nicely, right? WDC. So really the semis along with memory are still holding up fairly nicely. Tesla is something I'm keeping an eye on for a potential pop and fade. So pop and fade here is in play towards the downside. So if the markets do want to show any sort of weakness or consolidation coming to market open, Tesla is something to keep an eye out for. Pop and fade here off that 348 for continuation lower. And then for Nvidia, interested in trading both ways on this one. Daily time frame fairly neutral, intraday coming to market open fairly neutral as well. So interested in trading both ways, waiting for that reaction here on Nvidia. But yeah, that is going to be it for me today. I'm going to get ready for market open here now. So if you guys did enjoy that, appreciate if you guys drop a like and sub. If you guys haven't joined the free daily watch list, that of course is in the description below. With that being said, I'm going to call it a session here and I will see you guys all tomorrow. All right, take care, everyone. Have a great rest of the day. Peace.